Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. As a reminder, this is not one of the trades from one of our paid services. This is not a trade recommendation from one of my products. This is a trade for educational purposes only. All right, that being said, we are at marketchameleon.com. A fantastic options analytics site, and what I like to do is go to the unusual options volume page and sort by volume and see what some of the big names are doing. And today you could see AT&T with a ton of volume, a lot of calls, 92%. That tends to be bullish, so bullish activity tends to show up in calls. Bearish activity tends to show up in puts. Of course, there are plenty of exceptions, but that is the general rule of thumb. You can also see how much the volume is traded to its normal amount, to its average amount. So in this case, it's 210,000 is a lot of options, but this trade 5 times as much, over 5 times to a million. So you could just see when there's a lot of action going on. So one of the more popular names lately is Square. This is a Cathie Wood, an ARK, a big holding in ARK stock. So it's up to over $100 billion company, quite a bit of action pretty regularly. But even as active as Square is, it traded almost 300,000 options, which is twice as much as normal. 71% calls, which tends to be bullish. So usually when I see something like that, I like to look and say, well, what's going on? Why is there so much action in Square, and why is it all bullish or mostly bullish? And in this case, it was a couple analysts either initiating coverage or raising their price targets. A lot of talk and newsworthy items lately with Square in terms of its international business. So the company has a strong presence in the US, but has been expanding and has been aggressively hiring for international business. So as much as the stock has gone up, it still seems like it has some upside if it continues to expand internationally. So you can see the stock was up about 5%. So if we look at some of the activity, some of the specific trades here in Square, we can get a breakdown at what some of the larger block trades are trying to accomplish, and sometimes that can give you some hints onto what the what the smart money is looking at, funds and hedge funds and large institutional traders. So we got a lot of it looks like rolling some spreads from April to June. And this one here is interesting. Pretty straightforward trade, just a call buy, but way out of the money. So this looks like, now it's hard to tell, it's only a 2-cent wide spread, but you typically paying the ask means you're buying, you're paying the offer price. This is $400,000, almost 1,700 quantity of the 420 calls in September. So that's quite a while, but it's also way out of the money. The stock's at 245, so buying 420, that's there could be some other reasons. This could be some kind of trade as part of a bigger spread, but if we just look at this as a separate trade on its own, it's obviously extremely bullish. Someone is buying these way out of the money calls. They don't, they may or may not expect this thing to end up in the money, but if this, if the stock goes, let's say, to 300 by, let's just give a random time, by June, these things will be worth quite a bit more, maybe double, maybe whatever. We, to dig into it to get an idea, but the point is that maybe someone felt that these out of the money options were cheap, and then by buying them, even if it doesn't end up in the money, as long as it happens well before September, they could sell it for a profit. Or, of course, if Square goes up above 420 by September, then these things would might have enough intrinsic value to be worth something. But I'm guessing either this is part of a bigger spread that we're not seeing here, or someone just feels like the out of the money part of the pricing curve for the options is cheap, and it could go up. And again, that could easily happen well before September expiration. So you're looking at Square, you can see it's flattened out. It had gone this scale makes it a little bit difficult to tell, but I mean, it was at 50, and now you can see over this period here, up as high as 283. So obviously huge amount of buying. Now it's dropped back down, and it's been fluctuating between roughly 200 and 250. So it's back up to above 250. You know, someone again is buying these 420 calls way out here, but you know, if you get a move up to 300 in, you know, let's say the next couple months, those calls could easily pay off. So let's look at them here. Of course, this is the easy trade to make that anyone could do. It's just simply buying calls. So all you have to do is, in fact, that's as high as it goes. So 420 is the highest strike it goes. So that's probably why that particular strike was purchased. Apparently, again, someone felt this part of the option chain may be cheap, and you can see already. I'm looking at this, and they're $1 higher, right? They're quite a bit higher, you know, 50 cents $1 higher than what was paid for them. So already potentially made a lot of money on this trade just by buying it, and you know, the stock is now up quite a bit today, and that was enough so someone could theoretically have sold these trades out for decent profit after just one day without it going anywhere near 420. So that's where buying out of the money options can make sense. You know, and it's as simple as just buying those calls if you're interested in that. Now they've gotten more expensive, but you could see where potentially not having to buy something in the money can pay off if you expect the move to happen sooner rather than later. So buying straight calls and puts is what I do in my Options Floor Trader Pro service. If you're interested, there should be a link on this page, so check it out if you get a chance.